So more than 4 years after Lehman Brothers collapsed, it's easy to forget that stuff is still rumbling on as that winds to an end with creditors. We just had another kind of bookend this week. Archstone, which was a property company, one of the reasons Lehman got into big trouble, just been sold. But Anthony, it's not very clear whether it was a good deal or a bad deal, or how much money they made.
Exactly, it's gone for $6.5 billion. That's the equity value. They've got
Right.
$9 billion of debt, and the two companies who are buying it are rivals. It's the main one being Equity Residential, and actually, as a side note, Equity Residential used to be EOP, which is the leverage buyout that was done in 2006 that prompted Lehman to think we can do a similar deal with Archstone, and then got landed with it when markets froze up. But the $6.5 billion. We're not really sure quite what it represents. We looked at this, when was it? We looked at this a few months ago, and it was worth, we thought it was worth about $9.5 billion.
Well, they were going to try to IPO the business, right? They were going to try and take it public. They they were going to float a certain amount. Which
we should say by they here, we now mean the creditors of Lehman, effectively, who own the rump of this thing. Right.
So they were going to try and float it. We had some window into evaluation then. If you applied equities, Equity Residential's valuation, which was something like 23 times EBITDA to it, you came up with a valuation of somewhere around $9 billion. Right. But now it's selling for around $6 billion. So
but then we spent a bit of time looking at this last night. You look through the most recent filing for its IPO, which came out last week, and you see that its EBITDA on an annualized basis this year has dropped by about a quarter suddenly. I think, well, what's all this about? So we spent a lot of time trying to work it out, and there's this little note saying, oh, we reconstituted the company in June, July time, because basically they went out and they bought the other half of the company they didn't already own from B of A and who was the other one?
Another bank.
One of the other banks, Barclays, good old Barclays, and took it off their hands. They also got lumped with some of it.
So we have a little bit of Lehman-style opacity in the numbers here.
What's happened here? It seems that well, firstly they said that what we've done, we've reconstituted the company, but we've, as a result, we've done this push-down accounting, which basically means we've revalued our assets, which is the one thing that everyone wanted Lehman to do in the first place.
Exactly right. I mean, the fact was that nobody thought they were marking those assets to market, which is part of what caused a big part of what caused the concern about Lehman in the first place. Now they're saying they've revalued it, but
upwards,
which you know, I mean, it may be right. I mean, commercial real estate is sort of
they've taken some write-downs over small write-downs over the last few years. It's fair they write up. But you look at it, okay, well then why has EBITDA gone down this much? And if it has, actually, and you apply the same math that we did earlier in the year, it means it's worth like $3.2 billion, so like almost a third of what we thought it was. Which means if you're an Equity Residential or Avalon Bay owner, you think, why are we paying double for this thing? Right.
And so, but now the creditors of Lehman are actually getting some of that stock.
They're going to be the biggest among the biggest owners in Equity Residential and Avalon Bay if this deal goes through as planned. So you kind of wonder, right now, you're not only are you stuck with part of Archstone, but you're now investing in two other big real estate companies.
But here's the thing: you're not actually getting a premium, because then we looked at it even more and found actually there's a one-off amortization and depreciation charge that appears to have whacked EBITDA down last quarter only. So if you strip that out, actually it still seems to be worth about the same value based on these metrics we were using, which means the Lehman creditors are getting a third less than they should.
I mean, the simplest way to maybe think about it is the fact that Lehman paid $24 billion for this when you include the debt back in 2008. They're basically selling equivalent price is about $16 billion. It gives you at least some sense of where this asset is valued. It doesn't really tell you what creditors are getting, which looks like something around.
And actually, if you then round it back, that $8 billion hole is actually quite significant for Lehman Brothers' balance sheet back in the day, which pretty much justifies everyone's concern about the thing at the time.
Right.
Okay, we'll leave it there. Clearly, this still has some way to run. We'll be watching the final throes of Lehman, and we'll have more breaking views tomorrow.